How's it going, everyone? Welcome to the MMFunded ICT and SMC Bootcamp. In this video, I'm going to be covering Buyside and Sellside liquidity. And we will mainly be focused on a mechanical structure methodology alongside supply and demand zones and incorporating equal highs, equal lows, and trendline liquidity. The first thing that we need to understand is our strong points in the market. Strong protected lows targeting the weak highs. Strong protected highs targeting the weak lows in a bearish example and in a bullish example. How do we determine our strong points in the market? We want to identify our trend. Is price creating stronger lows, creating higher highs, respecting that previous range after the pullback, after the previous break of structure, to then mitigate a supply or demand zone, to then continue targeting those weak highs. Vice versa, in a bearish market, we want to identify strong highs targeting weak lows. In this example, we have a strong high formed that took out the previous weak low. After every single break of structure, price will always incur some kind of a pullback phase. We had that pullback phase, price respected that previous structural range from the previous high to the previous low, mitigated SND areas in this range to then continue targeting those weak lows. Let's take a look at a live example of price. This is Euro USD on the 20th and 19th of October 2023. Most recently we had on the M15 time frame, the M15 swing high, break to the upside with a candle body closure. We then incurred the M15 pullback after that break of structure, demand areas in control. So in this scenario, I had a more recent wick zone area, which I'm going to discuss in further areas of this course, and the more extreme demand areas, which created the original break of structure. All right, after price had that pullback, we then mitigated areas of demand. So expectational order flow is now to continue targeting those M15 weak highs. Where the buy side and sell side liquidity comes into MMFunded's ICT model is looking for clear inducement or equal low liquidity or trend line liquidity to be swept into the supply or demand zone that has created the break of structure. In this scenario, we had clear inducement above the supply or demand zone, which we can mark out as a sweep of liquidity. We mitigated into this area of demand, which then gave confirmation with a displacement fair value gap entry to continue long. Which in this scenario, we had clear inducement, which also a great confluence for this was being the Asia low. We swept the Asia low into the higher time frame SND zone. So we had that liquidity sweep, a reason for price to fuel for its next move, understanding our structure and order flow that the M15 highs are weak, longs were good probability, so confirmation, which we will discuss in a more detailed video later on. We had the mitigation of this SND zone. We had a reaction, a sweep of this low, the displacement and market structure shift with a fair value gap, which in this example, after the Asia sweep into the higher time frame POI being our demand zone, we had that displacement fair value gap, which gave good opportunity for longs to even potentially target the M15 weak highs, or if you're a more mechanical trader, targeting a mechanical fall risk to reward. Okay, so let's do some practice in identifying our strong swing points. Over here, I'm on Euro USD on current price date on the 20th of October on the 4-hour time frame. And all you want to go and identify is clear high and low points. All right, so for example, if we backtrack a little bit, we had this high create this break of structure to the downside. Okay, we had bearish order flow, bearish pullback. This becomes a weak low. Expectational order flow is to mitigate areas of supply from the previous breaks of structure to continue targeting those weak lows. At this point in time, this became a strong protected high, which we then broke structure to the upside. So that can become our 4-hour break of structure to the upside. What was a weak low after this pullback now becomes a 4-hour swing strong low. Okay, we've now started after that 4-hour break of structure, that 4-hour pullback, and we've now mitigated areas of 4-hour demand. we actually had two areas of 4-hour demand here. We had a more extreme zone and we also had a more recent zone. In this scenario, we had price mitigate the more recent zone. We created that internal break of structure to the upside, that internal pullback into demand to continue targeting those weak highs, that internal pullback into demand to continue targeting those weak highs, that internal pullback into demand to continue targeting those internal weak highs. And this becomes our overall 4-hour swing weak high. So can you comment down below what the expectational order flow is for Euro USD to continue following through this order flow to target these weak highs? Okay, so most recently, this would be our internal break of structure to the upside. We can just label that as an IBOS, which stands for internal break. This will become our 4-hour internal strong protected low. And this will become our 4-hour internal weak high. Valid areas of 4-hour demand sitting right here. All right, in a nutshell, a demand zone needs to create an inefficient push with a fair value gap. We need to have liquidity. In the scenario, we have this inducement over here. Okay, the zone needs to be unmitigated and the zone needs to create a break of structure. Again, I want you to make note of this. In order for a supply or demand zone to be valid, we need, number one, must cause break of structure. Number two, must create a FEG or imbalance. Number three, must have liquidity or inducement. Number four, must be unmitigated. Okay, so in order for a supply or demand zone to be an institutional level, which there is a big difference between that. A supply and demand zone can be every candle at every swing. So for example, this was a supply zone. This was a demand zone. This was a supply zone over here. This is a demand zone over here. This is a supply zone over here. Supply and demand needs to be complemented with liquidity concepts, structural concepts, as well as these important 4 criteria to be valid. All right, so in this example, we had the most recent candle that has created the inefficient push. We now have liquidity and inducement above this zone. It's created the internal break of structure to the upside, and price has yet to mitigate this zone. Price has never tapped this zone before. So therefore, it is a 100% valid demand zone. Okay, so now that you've seen a live example of what Euro USD is currently doing, I'm just going to replay the charts to a random date back at the middle of June. And just to quickly play this through with you and to identify liquidity on the various supply and demand zones that develop, as well as their 4 main criteria. Okay, so let me just bring this back over here. I want you again to keep these notes aside. Write them down, screenshot them, save them. Okay, so over here, most recently, we have had Euro USD with a break of structure to the downside. We have a valid area of supply here, and we also have a valid area of supply here. Why is that so? Because these are both valid candles that have created the inefficient push. The break of structure is unmitigated. All we need to see is a liquidity buildup. At the moment, the extreme supply has liquidity sitting over here. If price forms liquidity for this specific supply zone, we then can mark this as a valid supply zone because we can expect the sweep of this liquidity to gain fuel to then look for entry confirmations to continue short, targeting these weak lows. All right, we also do have valid older demand areas over here that has created these breaks of structures to the upside. But what's so important is to look at recent price action. Most recently, we've had this break of structure to the downside because we had price, strong protected lows, take out the previous weak highs, pullback, expectational order flow was to continue targeting those weak highs, but instead we broke structure to the downside. Okay, so I'm going to play price through candle by candle. So over here, we now have valid inducement for this demand zone. So what can we expect? We can definitely expect a sweep of this and a simple reaction. So let's have a look. Okay, so over here, we had violation of the supply simply because we did not create any clear leg or structure or inducement for this area of supply. Price broke structure, pulled back sharply, so we still want to see a bit of a pullback and inducement below the supply in order to be swept to then continue short and gain that fuel from the liquidity sweep into that supply zone. So let's have a look. Okay, so there we go. Definitely a valid enough inducement. This then becomes your rule-based buy-side liquidity that we can expect to be swept and a reaction off of the supply. Okay. In this scenario, price continued, did not mitigate our supply, but we swept liquidity on the 4-hour time frame into the demand area, which now is providing a reaction. So let's continue price. We also now have another valid demand area over here. Okay, so we've had mitigation of this demand, which can also become liquidity for the 50% of this demand area. So a good confluence trade in this example would be a sweep of this inducement into the 50%, which would be your sell side liquidity, to then look for confirmations on the lower time frame, whether that's a 1-minute displacement fair value gap entry, to continue long. Okay, there's the sweep, mitigation of the 50%, the displacement, fair value gap, the fulfillment of that gap. All right, price didn't clear this low, so it would have been 100% valid long. And we're continuing long from there to target those weak highs. Okay, so here's an example where price mitigated the supply. We didn't get confirmation. Price swept the liquidity, but just broke straight through it. No displacement fair value gap entry, which is completely fine. This then gives you your break of structure to the upside. This becomes your strong protected low. We do have a valid demand area over here with the inducement and liquidity. So what we could expect now is a bit of a pullback sweep of the sell side liquidity into the higher time frame PI with a displacement fair value gap entry to continue long. Okay, we also have a more extreme area of demand down here. So let's play price throughout and see what happens. Okay, price really just continuing bullish over here. No pullback at all. All right, we've formed some more liquidity over here. So we could look for a sweep of this liquidity into higher time frame SND areas. This is a valid SND zone that has created the inefficient push, these breaks of structures to the upside, and has inducement above it. Okay. More really equal bottom liquidity. We've had the sweep into that zone, and we then had a failure of that zone. Okay, so we definitely had a reaction off that demand, and then a pullback into this area of supply after this break of structure to the downside. Okay, so most recently we've had this new 4-hour break to the downside. Valid areas of 4-hour supply over here. So same scenario again. We want to see inducement form, the sweep into that supply to potentially look for shorts. Okay, price just kind of trickling along. No real pullback into that supply. We do have a new valid wick zone over here, which has also created this 4-hour break of structure to the downside. Okay, sweeping this liquidity into that supply, especially the 50%, and reaction from there. So in the scenario, this is your valid buy side liquidity. All right, new break of structure, opposite side supply. We're starting to mitigate these areas of demand. Okay, mitigation of that demand, sweep of this liquidity, displacement, fair value gap, smaller fair value gap over here. It's a very tight one, but we can still mark that out. And let's see what reaction we get. Okay, and failure of that demand. Understanding why price potentially failed this demand is because the current structure is bearish, so these trades of these demand areas would be counter trend and trading those 4-hour pullbacks because supply is currently in control. So in this scenario, all the demand areas will then cater for pullbacks. All right, so we do have valid liquidity above the supply that was just mitigated, inducement over here, which would be your buy side, sweep of that buy side, mitigation of that supply, and a reaction from that supply. Definitely valid to look for shorts. Again, a sweep of this double top liquidity, well, triple top liquidity, into areas of 4-hour fair value gaps over here, into areas of the 4-hour fair value gap over here, which price is now continuing short. So we've had this break of structure to the downside, strong high, weak low, valid areas of supply over here, and we also have another valid area of more recent supply over here. So same thing again, we want to see liquidity build up for these supply areas, such as inducement like that, and over here as well, which we would like to see the sweep into the supply to continue short. Okay, so in this scenario, we have the supply zone over here as well, which is also hasn't been mitigated at the 50%. We have this valid liquidity over here. So what could we potentially expect is a sweep of this liquidity, potential confirmation on the lower time frame to, after this break of structure, continue targeting these weak lows. Okay, there's that sweep. We had that sweep of liquidity. Could have looked for on a lower time frame for entry confirm to continue targeting those weak lows. We've then created that break of structure to the downside with a candle body closure. This becomes new area of supply. We do have a more recent area of supply over here. So if we see the necessary liquidity build up for the more recent, it'll be valid to look for confirms. So in this scenario, we had a sharp pullback into the supply, low liquidity. We've swept the supply and continued short from there. So this can also become inducement for the more extreme supply. And we've also created this break of structure to the downside, created by this valid area of supply, which we do have inducement above it. Okay, more liquidity forming over here. So we could potentially see the sweep of that to continue lower. Okay, equal tops, mitigation, and failure of that supply. So in this example, we had a complete failure, no confirmation, price just completely closed above. So in this scenario, our structure now shifts to the upside. So we've had that bullish shift. We most likely coming off higher time frame demand. This becomes a valid area of demand, as well as this area over here. So we have a recent and an extreme. If the recent forms the necessary liquidity, valid for confirms. So in this scenario, price broke structure and sharply pulled back with no liquidity. So we can mark that as failed. And we also have this new supply zone over here that has now failed this area of demand and also created this break of structure to the downside. So this area of supply would need to have the necessary liquidity lying below in order to look for shorts. Okay, inducement, sweep of that liquidity, mitigation into that supply. So that would have acted as your buy side liquidity, sweep into that zone to then continue targeting these weak lows. Okay, and we've now targeted that weak low point. New areas of supply have formed, valid candle with the inefficient push, the fair value gap, displacement, the break of structure. So if we form necessary liquidity for the supply, we can look for shorts. If price violates the supply, we can look potentially for shorts on the more extreme supply. Okay, so we can actually mark this out now as our weak lows. Okay, new break of structure to the downside. So then we just update our supply. We have a valid supply area over here, which mitigation is only valid at the 50%. And again, we have valid liquidity sitting over here. So what can we expect? Is a sweep of this liquidity, mitigation into the supply to continue short or cater for some kind of reaction. Okay, sweep, reaction. Price then violates that supply. We then mitigate areas of the 4-hour fair value gap over here instead of the overall supply zone. Okay, so the expectational order flow is to continue still targeting these weak lows. After this break of structure to the downside, we have also formed now new areas of supply zones over here. So we can potentially expect is a sweep of this liquidity into the supply to continue shorter. Okay, sweep, mitigation, and price continuing shorter from there. What I'm getting down to when identifying your buy side or sell side liquidity. The buy side or sell side liquidity, rule-based, needs to be sitting above or below a higher time frame supply or demand zone. Ideally, if this liquidity is sitting as Asian session liquidity or Frankfurt session liquidity, which I'm going to go over in the next videos of this bootcamp, price likes to sweep that, mitigate the higher time frame supply or demand, and gain some kind of reaction, or even target the overall structural weak high or weak low. And what this does, it prevents you from marking out all sorts of liquidity. So for example, over here, we have valid sell side. Over here, we have valid sell side. Over here, we have valid buy side. Over here, we have valid sell side. So now instead of just trying to trade, instead of looking at every possible liquidity point, for example, the sweep of buy side to look for shorts, it could be a valid trade plan, or the sweep of sell side to look for longs, keeps you to a much more rule-based, disciplined system to identifying the really high probability liquidity. So for example, in this scenario, was a really high probability liquidity simply because we had the Asian sweep, we had the low of Asia sitting above a high probability demand zone, we had the sweep of that Asia liquidity into the high time frame demand, that 1 minute confirmation to continue with longs. Whereas all of this liquidity over here, all right, we do have valid sell side above a supply zone, which could have been 100% valid liquidity point for the supply. But in this scenario, you wouldn't have had confirmation. Price just completely violated that supply. Also, understanding our structural expectational order flow is to target these weak highs. Let's take a look, for example, at yesterday. Okay, we had Asia session, which is this blue box, this low over here, sweep into this higher time frame POI. We had that displacement, fair value gap entry to continue long. We also swept the Frankfurt session, but I will include a separate video later on in this bootcamp dedicated to the session sweeps and session liquidity. Right now, I'm just quickly introducing you to the higher probability liquidity. With that being said, I'll see you guys in video number 2 of this MMFunded bootcamp on YouTube. If you guys want to get access to my full 3 structure type methodology, which will give you a much clearer and mechanical way of approaching your structure, supply, and demand zones, as well as my morning live streams, marking this up live for my members every single morning, going over the trade plan, going over the high probability liquidity points, as well as the entry confirmations, giving each and every member clear crystal clarity and understanding and context of what price is doing going into session every single morning. I will leave a link down below to that Discord community. Please make sure that you subscribe with the notification bell on so that you will get a notification every time I update this YouTube bootcamp course. Take care, guys, and I'll see you in the next video.